Good afternoon, everyone, and welcome to our YouTube live stream called Hot Stock Panel. Glad that you're here. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here. If you can hear us loud and clear, please type a VV Nation in the room to let us know that all the technology on our side is working. In the background, I have Joey, who is my producer, who makes sure that everything is working. Say hi, Joey. Hi. You could probably barely hear him, but that's okay. He's better heard than seen anyway. So we're keeping that in mind. What do we do at our hot stock panels? Well, we bring on a panel of guests, of instructors like myself, and we go out and we talk about stocks. We have a theme every week, every month. This month, wow, got to get my tongue working right. This month, it's all about hot stocks to swing trade, and I do have with me two of the finest swing traders in the VectorVest team, Jerry D'Ambrosio, who's on your screen, and Dr. David Paul in the UK, who is also on your screen. And when it comes down to swing trading, they are, lest I say, experts at it. Whether they want to agree with that or not, they can talk you through any trade and make sure that you know why it's swing tradable and why it's got some swing tradiosity to it. That is a Glenism. It's a new Glenism. Swing tradiosity behind a stock. So just keep that in mind. I want you to use that going forward. Hashtag swing tradiosity. The hot stock panel for this month with swing trading is all about trying to hold stocks for a couple of days to a couple of weeks. So not an overall real short-term trade. Sometimes they can be, but not long-term investments for the most part. So a couple of weeks to a couple of days, a couple of days to a couple of weeks, however you want to look at it. We're going to walk you through 7 trades. I will have 2, Jerry will have 2, and Dr. David Paul will have 3. Real quick, just to let you know some other things. This webcast will be, or live stream will be podcastable. So if you did not get to see this live or want to re-go over it again, these are located on any Podstream podcast place to get a podcast. Always search for, in this case, Hot Stock Panel. On Thursdays, we have Trending Thursdays. You can always look for Trending Thursdays. Down below us, we have a VectorVest store where you can get some t-shirts, mugs. I don't have a mug sitting out here. That's all Joey's fault. But if you want to get a mug of your own, look down below this video. You can get a mug. We do have a mobile application that you can look at VectorVest on your mobile screen. And last but not least, do not forget to comment, like, and subscribe to the VectorVest channel. Big thing, subscribe. I'm still noticing that more people that are here looking at our live streams, more people are not subscribers to the channel. If you like the content, it's okay to subscribe to it. And then you hit the bell icon so you'll be alerted to all of the new content as it comes up. Jerry does presentations that get relayed over to YouTube. David does presentations that get relayed over to YouTube. Support the channel, especially if you like the content. That's what it's here for. It's here for you. All right, so as I've already introduced our guests, we talked a little bit about what the panel is all about, and we do this once a month, folks, and it's great. It's gotten a lot of traction. A lot of people tune in to watch these live streams. We will have a giveaway today. We're going to give away a mug. Here comes the channel. Jerry, I know you're going to watch the channel now. Here comes the channel. If you type in the word mug, keyword mug, you will be entered in to get a mug given away for free. And we'll give that away about 2:45 p.m. Well, actually, in this case, it'll be given away at 12:45, about 12:45. All right, and now we're going to get into our stock picks. I've never been this early getting into stock picks because I talk a lot. But today, I'm trying to be cognizant of my 2 esteemed colleagues, and I want to get us started with my picks. All right, so when we talk about swing trading, again, trying to hold stocks for a couple of days to a couple of weeks, And I'm going to love the idea of having 3 different mentalities in this panel to help you understand why we picked the stocks we picked. We're going to talk about why we did it, how to know when to get into it, and how to actually get out of the trade. And we're going to teach you to not be greedy. Bears make money, bulls make money, pigs make bacon. I love bacon, but VectorVest will help you to save your bacon, and that's very important when investing in the stock market. So if you look at the stocks, here's my watch list of the stocks today. Joey, I'm going to take this down a little bit. I don't want this anymore. All right, I want to look at the full-blown watch list. My guests are able to see this as well, I believe, or maybe. Okay, so here's our 7 stocks. They're automatically sorted by our master indicator, VST. So the stock that has the highest combination of value, safety, and timing will be at the top, which will be AMD, and the stock with the least will be at the bottom. Notice that from a swing trade perspective, every stock has a VST above 1. All of the stocks are buy recommendations, so if nothing else, you can feel comfortable in the idea that we are setting you on a path for good quality stocks that you can make money, whether how quickly you want to make it or how long you want to try to make it. You're in good quality stocks, and we will break that down for you. Let's start off with the 2 stocks that I have in this list. One of them is APPS, and the second stock is Equinox Gold. All right, so why did I pick these? Well, I looked at a lot of graphs to help me to determine what I wanted, but I also tried to pick into an industry group that I really thought was going to be on the upside of breaking out, because no matter whether it's swing trading, bottom fishing, momentum trading, it's all about trying to buy low and sell high. And I think from a swing trade perspective, we're going to introduce you to that fact of why we think that these are good opportunities or good times to get into these stocks. We're going to analyze them, and for people out there who are not VectorVest subscribers, Joey is going to type a link in the chat for you that you may, if you want to, you can take a trial to the VectorVest software for 99 cents for 30 days, which I think is a tremendous deal. All right? And we're going to use the power of the software to analyze these stocks. One of the things you will find in the VectorVest software is that we apply an intrinsic value to every stock. It's going to help us to determine whether the stock is under or overvalued. Our mantra overall is to have you in safe, undervalued stocks that are rising in price in a rising market. Now, the key thing about that undervalued part is that just because a stock may be overvalued doesn't mean that it's a bad stock, especially from a swing trade perspective. So the stock APPS is trading at $23.65. This is a stock that has been on a tear. It's pulled back and could be prime opportunity to start thinking about getting back into it. The value is at $19.62, so the stock is considered to be slightly overvalued. But keep in mind, just because it's overvalued doesn't make it a bad stock. Let's move over to the indicators that separate us from everybody else in this industry. Our indicators, our core proprietary indicators, which are all cast on a scale between 0 and 2, we make it easy for you to understand the indicator. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. First indicator, relative value, RV. This looks at a stock's long-term price appreciation potential. That over the next 1 to 3 years, how will this stock fare to an alternative investment in a AAA corporate bond? You buy a bond, it matures. After it matures, you get all of your money back with a small interest. It's not a gangbuster trade, but it's a relatively safe trade. Relative value will tell us, should this stock outperform or underperform that AAA corporate bond? Well, we can see it's clearly above the value of 1 at 1.69. It's got good upside potential. The next indicator, relative safety, RS, is an indicator of risk on the stock. Relative safety looks at the consistency and predictability of a company's financial performance. A company that consistently meets or exceeds its earnings expectations quarter over quarter and year over year are very attractive to investors. In the next indicator, RT, which looks at the short-term price trend of the stock, its relative timing. JD, can you take that off for me? I don't want that up just quite yet.
You got it.
All right. No, there you go. Thank you. All right. Relative timing looks at the short-term price trend of the stock. Is the stock in an uptrend or not? RT above 1 tells me the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend. So RT is at 1.58. This stock is not only in an uptrend, it's in a nice uptrend, and it's got a VST of 1.48. The stock is a buy recommendation. And something else that I like about it, it grows its earnings at a clip of about 50% a year without earnings growth. I like that. All of those things put together, even though the stock is slightly overvalued, these are things that make the stock attractive. Now all we need to do is time it, okay? Equinox Gold, trading at $13.15 with a value of $26.74. Clearly undervalued. Upside potential is at 1.77 on relative value. Stock's got good upside potential. This should help a lot of you out there who are still wondering if gold is a good play or not in regards to Equinox having good upside potential compared to a AAA corporate bond. Now, I'm willing to assume some risk with relative safety below 1. I like the good upside, but the relative safety below 1 says I'm willing to take some risk on to put this trade on. Relative timing at 1.55. The stock is definitely in an uptrend. And another indicator, CI Comfort Index, the stock's ability to withstand long or lengthy price declines. So I analyzed it. Equinox has got an earnings growth rate of 48% a year. Both of the stocks that I picked are good earnings growth plays. I like that. And let's take a look at those graphs. So that was analyzing the graphs. And for those of you who are not subscribers to the software, that's as quickly as you can go through and make an intelligible decision about a stock that you're thinking about getting into. So as I look at Equinox Gold, I'm looking at a 3-month graph. You'll see 2 moving averages on them. I like the 3 and the 8. Whether I am a trader or trying to be a swing trader, I think it does a good job. Those moving averages do a good job of showing you a trending stock. When the 3, which is the green line, goes below the red, which is the 8, that's a good opportunity to take profits. All right, but look at the longacity. Look at the longness. Look at the trend of the stock using the 3 and the 8. I think it does a good job, whether you're trying to hold it for a couple of days to a couple of weeks. And it also keeps you from panicking when a stock's price goes down. Look at that, the 3 and the 8 hold. All right, for those of you on podcast, you can always look at a stock's graph, put the 3 and the 8, whatever moving averages you like. And I'm looking at a 3-month graph. I think a 1 quarter worth of graph is enough to help me to make a decision from a swing trade perspective. Now, looking at it more recently on the subgraphs below, we have relative timing. We have the RSI, which is a technical indicator to help me to know when a stock is overbought or oversold. And I'm looking at CI, the comfort index, the stock's ability to withstand long or lengthy price declines. Notice that the smoothness of the graph from the bottom left to the top right over the last 3 months, CI has never fallen below the value of 1, telling me that this stock has got a lot more smoothness behind it, more so than volatility. I like the bottom left, top right. The stock is recently coming off of a high. Even with the pullback, the 3 and the 8 did give you a solid sign to get out here. If I look at that date where it crossed, looks like on or about 8/24 of 2020. Look at all of the time you were in the stock. Take the profit when it gives you the opportunity to take it. And what I like about it now is look at these wicks on these 2 candles over the last few days, forming a beautiful level of support that the stock is bouncing off of. Notice that the 3 and the 8 just recently crossed over the last couple of days as well. Nice open candle today. The stock is not at a level of being overbought yet. The CI is back on the rise after the stock did pull back. High CI stocks will pull back, but high CI stocks have the ability to be resilient enough to resume going back up in a short amount of time. From a swing trade perspective, I like those things. Coming off a level of support, the 3 and the 8 crossing, CI staying above the value of 1, the stock's RSI telling me that it's not overbought at this particular point in time. Relative timing, though, started pulling back. But look, if you drew a line connecting the highs on RT, we briefly just got above that little bit of a downtrend on relative timing and now moving higher. I like the stock. I would say it's a good stock to get in now. The stock is trading at $13.12. I would put in a stop order about 5 cents higher than the high, which is today's candle, to make sure or ensure that I'm buying into a rising stock. Now, it's got a level of headwind sitting at the high at about the price of $13.66. I would start getting wary about there. And you know something, if I've made a little bit of money over the next couple of days, maybe take half off the table to see if the stock has got the wherewithal to break through that level of resistance and continue to move higher. A graph is worth 1,000 words. I look at the story that the graph is telling me. The story is a good one, and hopefully it will continue to be a good story going higher. But I like the stock as a pick now to try to hold for a couple of days, possibly even longer. All right, so we're going to do some analysis with my panel, starting with David. David, you have anything you want to add to it or put behind it?
Yes, good day, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK, and hopefully there's a few UK people in the room. Glenn, first of all, the bullion price looks very strong today. Both bullion and bullion gold and silver have been pulling back in a symmetrical triangle. And it looks, silver especially, as if silver is going to break up from that. And many people are talking about an upside. The fib target from that triangle will be certainly well above 2,000 on the gold price, up to about 2,300. I like the way the share's in the trend. I like the way it's pulled back to the last old top. And it's, in fact, the tails on those two candles are pretty much at the last old top. And that's what candlestick analysts refer to as a tweezer bottom. And that looks very strong indeed. It's what a hero of mine, a guy called Richard Wyckoff, used to call a sweet spot, where the market pulls back to the last old top. As you can see, it's been trading in there for a very long time. So the market's very fond of that particular level. Looks good to me. Looks very good to me. Relative safety is a bit low because clearly a gold mine is prone to the ups and downs of the gold price, and that has been quite mercurial over the last 5 years. So I'm very positive about the future of gold, and certainly, although I'm not talking about any gold stocks this afternoon, in my longer-term portfolio, I've got quite a strong allocation to gold and silver at the moment. So I love the share, yeah.
Jerry?
Couldn't have said it any better myself. David hit all the points. Recent pullback, stopped right at that most recent high there back at the end of July. I'm a big candlestick analyzer. I love analyzing candlesticks. Anytime I see long lower wicks in a down move, particularly when it reaches a level of support, I can kind of really consider that most recent high there at the end of July, beginning of August, a level of support. If you look back at that level, you could see the long upper wicks, right? So you're in an uptrend, and those long upper wicks kind of tell you that the uptrend is losing momentum. Sellers are able to close price closer to the lows of those sessions. In an uptrend, that's not bullish, that's weakness. Stock pulled back for a couple of days, but then eventually resumed the uptrend. But what we're seeing now is a pullback, and buyers now coming in and pushing price off of those lows, not quite near the highs of the day, but quite a bit off of the lows. You got a nice 3-8 crossover. Relative strength index is interesting because, like Glenn said, if it's below 30, that's oversold. Above 70, that's overbought. Well, when it's in between and rising, that is considered a trending piece of analysis, a trending environment. Rising from below 30 to above 30, you're exiting out of an oversold condition and entering into a trending environment, and that's kind of where we stand now. New trend, 3-8 crossover, so love everything about it.
All right.
I think that, Glenn, when you see tails and candles, especially where old resistance became support, that's invariably a sign of very strong and smart institutional buying. With respect, the man on the street rarely buys at support. They invariably buy after there's a green bar. And as you can see, the market stopped and there was a green bar. And then what happened is that the smart money took it right back and run the stops, which would have been underneath the green bar before it goes again. So tails and candles invariably a sign of institutional accumulation. And also I think that if you were to take the time to draw a trend line along the lows on the way up over the last 4 or 5 months, there's a pretty strong trend line underneath those lows. Even going back much further than that, Glenn.
So June,
There's a strong trend line there, and what you actually get at that point is a confluence of where support, where resistance became support on a long-term trend line. And I can pretty much guarantee that if we had the time and put on some Fibonacci levels there, that there'd be a 62% retracement there as well. So, and that's putting together that confluence of support and resistance via old resistance becoming new support, a long-term trend line, and Fibonacci is pretty much what I teach at one of the things I teach on the Precision Swing Trading course that I do with you guys. I haven't worked on Wall Street, but I've worked in the City of London. I've worked in the dealing floors in Johannesburg, South Africa for a very long time. And I know that the institutional traders employ those 3 techniques to try and work exactly where to get in. And they will be buying at the level, not waiting for any form of confirmation. So getting it, and the level there, and clearly it all runs around the big number as well, and there was a 12 there. So a lot of things coming together at that particular level, and it was actively accumulated there. So anything can happen, and clearly if the gold price in fact takes another leg down before it goes again, that will cause the share to come back. But the probabilities of success are firmly at your back. I would give that a 70-30 probability of moving strongly up.
And you know something to add on to that level that we keep talking about as formal level of resistance, current level of support. God forbid you get into the trade. Jerry, would you not say that that's a good line in the sand to get out of the trade in case it falls against you?
100%.
There you go.
Those 2 lows probably are smack dab right at about $12. So
it's to be exact. It's at 12.11.
Yeah. So a few cents below that, absolutely.
Excellent. All right, I'll give you guys both my $20 for saying nice things about that stock later. All right, let's go to my next stock, which is APPS, APPS. This one was a stock that was slow to rise, but it rose nonetheless. There was a little bit of trepidness. I don't want to make a Glenism out of that, just don't want to. But the 3 and the 8, even with that, did give you, as the stock begrudgingly rose, gave you an opportunity to still make some money in it. It then moved sideways, but then look at the explosiveness. Look at the explosiveness, the 3 and the 8. The stock was getting out of a level, wasn't even at a level of being oversold, but it was, as Jerry mentioned, in the trading level. And man, that stock took off. RT was already in the background saying, just be patient. The stock is in an uptrend. Just be patient, and then look at the CI. As the stock's price really started moving, it showed that it was it wasn't susceptible to long or lengthy price declines. I like a couple of these indicators you can find anywhere. You can put moving averages on any software. You can put RSI on any software. But our other indicators like relative timing and CI are are only found in the VectorVest software, and it does give an added sense of more confirmation behind the decision that you'll make. So the stock took off. This had been one of the stocks that we've looked at in the Jockey Club time and time again, which is our trading room, and the stock ran. All right, using the 3 and the 8, getting out when the 3 crossed below the 8 was a great opportunity to not be greedy and not have to wonder when to get out of the stock. All right, boom, it fell again. Another level of support was created. All right, after 4 days, 5 days of falling, we started moving back up. Now, my only issue with this stock is the 3 and the 8 haven't crossed yet. All right, this is something that's on my radar as another opportunity. Not ready to pull the trigger yet, but it met the criteria of what I was looking for. I want to show you something else. You notice that we have a down day today? Look at relative timing. Relative timing again is in the background saying, be patient, I got you. Because price moves RT. RT doesn't move price. Now the stock's price is moving down, but RT is rising. That's definitely a bullish indication. And all you got to do is wait. For me, as I give out to you, I would really wait for confirmation of the 3 going above the 8. I love the stock's ability to withstand longer lengthy price declines with the CI above the value of 1. But this is a stock that's on the radar. And if the 3 does go above the 8, boom, pull the trigger. I don't think you need any more confirmation than that. That's just all you need, especially knowing that RT is rising as the stock's price is falling today. So that's what I'm looking for on this stock. It's a setup. It's not actionable yet, but it is a setup. All right, David.
Yes, Glenn, well, it's been a great stock, that's for sure. I think that where it's sitting at the moment, if you go back just after the gap up, there's 3 days where it made a high, pretty much where it was at the minute. Those 3 days that you've got your cursor on there, and that level, yeah, just on those 3, just around those 3 days, the market's come back and kissed that level. And I agree with you, there's an awful lot of fresh air there. The nice thing about this stock is that if the stock breaks up now and breaks up through the last high, it would mean that the bottom charted 2 days ago is significantly higher than the last top. And if you go back to 1880, that's what Charles Dow referred to as a fast trend. So pretty much the only time I like to trade breakouts is when there's fresh air between the last bottom and top. So there's the last top, and where you've got your cursor right now would be the last bottom, somewhere there. And if it breaks that high, that's what Charles Dow would call a fast trend. And I think that will motor. I think you could precede that by using your 3 and 8. So pretty much the only time I actually like to buy breakouts is if I see a fast trend, and that's how Dow referred to a fast trend, a bottom, a new bottom which is significantly higher than the last top. If I could ask you to do one thing, Glenn, would you mind sort of messing up your chart by putting volume onto that?
Sure.
Would that be... Because I think that from memory, I don't own this stock, folks. It actually moved too fast for me. And if you put volume on here, you can see that the volume really took off during those up days. The volume down is a little worrying, but now as the stock is pulling back, the volume is drying up. And that's a good sign. And you can see on that green day, which was yesterday, I presume that was, that was Friday, that on the up day, the volume went up a little bit, which is very positive indeed. So I think the stock looks great. The earnings per share, the growth rate, earnings growth rate is 50%. If it breaks up through that last high, I think that stock's really going to motor. And I'm going to seriously look at it over the next couple of days, as you suggest, yeah.
JD?
Yeah, just, I mean, you guys have said it all. Just in terms of an entry, so we haven't really talked about where to enter if you're not in right now. Use today's high, right? So we're a little bit off of, we're actually nearer to the, closer to the low of the session. Glenn, if you were to close that, scroll up over there, yeah. So the low is 22.46. The current price is 23.98, and the high is 24.55. So, we really want to see this most recent couple of days, yesterday, following through into today. The momentum continues. So 24.55 would be my trigger price. Anything above there, 24.60, 24.65 would be a good entry. And the most recent low there, the swing low that we are pulling off of, should be your initial stop. And that's really kind of all I would add there.
There you go. All right, so those are my two stocks that I picked up for this panel. Hopefully we've walked through what to look for and possibilities. And keep in mind, I'm with them as well. I'm thinking that APPS is more so on my radar, especially knowing what the stock has done most recently in the last month or so. It went on a tear. It could be setting up for that right now, especially bouncing off of that bottom. And I learned so much from Dave when I listened to him. What did you call this? A fast track?
It's a fast trend.
Fast trend.
This is Charles Dow's work from 1880 in the Dow theory.
Oh, I was alive back then, 1880.
I shall ignore that. We had a fast trend. A normal trend is where the bottom pulls back to the last old top. And then what he called a creeping trend was when the bottom interferes with the last old top. And a fast trend is fine for breakouts. If it's a normal trend, you want to try and buy the pullback to the last old top.
Okay.
And if you see a creeping trend, best to avoid.
See, I like that. And that's not only do I pick up those things, but I think for our viewers out there, that's great information to pick up as well. All right. So tell you what. Go ahead.
It was Dow's way of talking about momentum before momentum indicators were invented.
Gotcha. All right. So what we're going to do, we're going to go back to the Viewers tab. And Dr. Paul, we're going to look at your three stocks, and then we're going to look at the graphs. So before you start, let everybody out there know who you are and what you do.
Okay, well, I'm David Paul. I'm the Managing Director of VectorVest in the UK and take care of South Africa as well. I have been trading. I put on my first trade in October 1982. I was living in South Africa at the time. I was a professional rugby player at the time. I traded while I worked for De Beers, the diamond people,
Glenn, we can hear you.
You didn't mute me. Sorry, folks.
No, that was on Teams. I hear you on Teams.
Oh, okay.
Continue, David.
Yeah, well, sure. I traded while working for De Beers until 1988, and I've been trading on my own ever since. I'll leave it up to you as to whether you think I've got 40 years experience or 1 year's experience 40 times over. But nevertheless, I've been trying to make a living out of markets for a very long time. Over the last 10 years, I've been helping people help the performance with VectorVest in the UK, in South Africa, and over the last year or so in the US as well. So that's my background. My preferred style is a swing trader. I have a long-term portfolio as well, but my preferred method of trading is with a swing trade, is as a swing trader, which is so that's what I'm going to try and talk about. The first share that I've got up, and the three picks that I'm talking about are three shares that I own. I've got 7 positions running in the American market at the moment. Some of them have been running for quite a long time, and these 3 I've in fact just got into in the last few days, a week or so. I had a great trade a few months ago on AMD, and those of you that have had a look at the stuff that the guys at VectorVest send out. I do a video every Friday or so, but a really good trade in AMD. I got out of that at 85, and I bought into it a couple of days ago. It's got impeccable VectorVest credentials. As Glenn says, the share is trading well above the VectorVest valuation, and if you were a very long-term buy and holder, that may worry you. But if we go across, we're not. If you go across a little bit, it's up nicely today. The relative value is 1.4. So the question I get asked most at VectorVest is, how can the relative value be 1.4 when the share price is trading at twice its value? So here's my explanation. If the price stays at 91 and the earnings come in as we anticipate, as you can see, the growth rate is 31%. If the earnings come in as we anticipate, then in some time over the next 3 years, the share will be significantly undervalued. So the share has gone a long way in the short term, but over that window of 3 years into the future that's used for the RV calculation, there's still plenty ahead. So the relative safety, which measures the safety and the predictability of the earnings at 1.32 is great. And the RT at 1.79 is saying that the short-term trend is strong. VST is 1.54, and the comfort index, which Glenn explains, measures essentially the long-term trend at 1.78 is superb. Those of you, again, that have done that precision swing trading course that Jerry and I do, I have a search that finds those shares quite easily, and that's where these shares came from. Impeccable VectorVest fundamentals. And the one thing we haven't spoken about is the general market is rising. And for my swing trading, I use the DEW market timing system on VectorVest. And ladies and gentlemen, that market timing system has been up since the 6th of April. The Dr. DeLito, the founder of VectorVest, he says that the most important thing to know is whether the market is rising or falling. Everything follows from that, and that's just such a cracking line because there was the upswing. Thank you, Glenn. That was the upswing on the 7th of April. It's sort of tattooed into my subconscious that, because I assure you, on the 7th of April, that took a great deal of testicular fortitude to buy the market down there because the world was falling apart. And my first job in the City of London, a lifetime ago, a very stroppy Scotsman was the desk head. And he used to say to us that when it's time to buy, you won't want to. And similarly, when it's time to sell, you won't want to. So the general market is rising. We've got a share with impeccable fundamentals, both in terms of safety of earnings and in terms of earnings growth itself. And that's a really, really good place to be, whether you're a long-term investor or whether you're a 3 to 5 day swing trader. So AMD looks good to me. So another share that I've got is Autodesk. And again, Autodesk trading above the VectorVest valuation. It's down a tad today, but not too bad. The RV is a whopping 1.48, and the relative safety a fair 1.18. RT above 1, and the VST a respectable 1.29, the CI at 1.48, and it should grow earnings at above 30% next year. 36%, and as you'll see in a second, I liked the technical formation, which we'll have a look at when we get to the charts in a second. So fundamentals not quite as good. RS is a little lower than AMD, but nevertheless very respectable VectorVest metrics. And then the last one is Pinterest. Now, Pinterest is me living on the wild side a little bit. It's trading a mile above the VectorVest valuation, a mile. And RV and RS are not good at all. However, the technical picture is exceptionally good. RT is 1.83, and the growth, it's on a buy recommendation, and we reckon it's going to grow our compound earnings by 42% next year. So a technical play. and I believe, and the market believes, I think, that I like to phrase it like this, that the gold is still in the ground. The share's got a tremendous amount of potential, and that potential hasn't quite come to the books yet. So it's a much more aggressive trade than the other two that I put up. So two with great VectorVest fundamental metrics, one with just technical metrics. So Grant, if you could bring those charts up for us, sir. AMD. Now, maybe go to a 6 months chart if you wouldn't mind. That's AMD, folks, and this is my normal way of charting, in that I look at the price on a candle plot, sometimes on a bar plot, depending on how I'm feeling. I look in the window below price, I look at earnings per share growth. And that earnings per share growth, ladies and gentlemen, as Ben Graham said, Buffett's mentor, and happy birthday, Warren, you're 90, I believe. Earnings per share is the engine that drives the share price. And then down below that, volume. And I like to see markets breaking on increased volume. I traded it from the last breakout. Hard to see now as the chart gets rescaled, but I traded it the whole way up, and I traded that, and everybody knows about that. I put on 2 moving averages, and ladies and gentlemen, if you see some of my videos, you'll see that there's no moving averages on there. That's because if you've been looking at these averages for 35 years, you know where they are without putting them on the chart. So the 21 and the 55 moving average, they define a strong trend. And I like, the market likes to pull back into the zone between the two, between the 21 and the 55. And I call the area between the 21 and the 55 the zone. My old university professor used to say that you got to keep a level of mystique about your work, and I thought the zone sounded suitably mysterious. So it should pull back into that zone. As you can see, AMD didn't. I was waiting for it to pull back into the zone. It didn't. We've got a clear, fast trend. Now, if you put, Glenn, if you go to the left, if you in fact, there's the last top, you're right. And if you, in fact, put another horizontal, that's the last major top. And then if you go to the next bottom, which is, there was 3 down candles, you got it, sir. And that's the last bottom. Now, that is a fast trend. That is the trend speeding up. Now, I know many of you are thinking that that's naive, but I've made a heap of money out of that. 21's above the 55. It doesn't pull back to the last old top, and then it breaks up. The fundamentals couldn't be better on the darn thing. VectorVest have earnings per share has been upgraded. That step, if you see a step in earnings per share, that's normally money in the bank. As you see, it steps. That's money in the bank. So I believe the share is looking at $100 quite soon, maybe 110. I think I worked out a target. Now, how do I get out of them? Well, I do the same thing. My entry on this particular share was a break. I got in as it broke. Where you drew the last bottom, there was a green bar, and I got in just at that green bar, just there. Now, what I do is that I put a stop loss below the previous low plus a few ticks. Once I've made as much as I've risked, I sell half, and I get my stop loss to entry. And then I do my best to stay to hell out of the way and let the other half run. And I've been doing that forever. So if I buy a share at $10, folks, and the stop loss is at 9 to make the sums easy, I'm risking $1 per share. When the share has moves to 11, I take off half and I bring the stop to entry. I then let the second half run to either a technical target or in this case, as long as it stays above that 21-day moving average, I do my best to stay well out of the darned way. Okay, so a small profit on half, and then I'm looking for a runner on the other half to make 3-4 times what I've risked, and that I've been doing quite successfully for a very long time. The last trade in AMD I got out at 85 and got back in the other day, and I think that looks quite good for more upside. Very, very happy with that indeed. Any comments?
I like the trade.
Glenn?
I like that the trade is hitting a new high today. Volume is pretty steady. Most recently, pulled back a little bit, but pretty steady overall. Earnings per share, the engine that drives a stock faster. Good earnings, you can't beat that. New high, big bar, very little wick, clearly above the 21. I like the moving averages, and whether it's a 3 in the 8 or 21 or in a 51 or 55, whatever moving averages best fit you, use them. And I like the idea that if you've taken off a little bit and let the other half run, that 21 is a good spot overall to keep you and let the stock run. Absolutely, let the stock run, and if it pulls back, you already made your risk already. Now you're playing with the house's money. Now you're playing with the house's money. Correct. And just let it Correct. Go. So yeah. I like big candle today, very little wick. So no bulls or bears pushing away. It's a solid good day. JD?
Yeah.
Yeah, same. Breaking out new high. I actually see a little mini ascending triangle that's being broken to the upside. We've seen a few higher lows there over the last couple of weeks, but somewhat of a level of resistance. You got 2 touches there, right in that area where Glenn's pointing to. So that's an ascending triangle. Breakout today on higher volume. I mean, volume's at almost 50 million shares already. We still have 3 hours left. We're going to see a significant pop in volume today. Earnings per share, great. 2 moving averages that David's using, trending upward, separating from each other, indicating a strengthening trend. So everything looks really good.
All right, good pick. Let's go to your next one, which is ADSK. There you go, David.
Okay, ADSK, maybe if you go to a 6-month chart there, Glenn. Yeah, that's it. We've got earnings per share rising, and as you can see, as the price has moved up, volume has risen, and now we've got earnings per share is good. Glenn, could you just take earnings per share off, give us a little bit more screen space to sort of expand the price action? And maybe less volume so we can see the price. That's it, sir. Now, there's the 21 and the 55, and this is quite mysterious how the market pulls back into those levels. And if you could go right back to where the big takeoff was a few months ago, you can see a little bit further back, sir. Now, when just after the 2 moving averages crossed, you can see how it pulled back into that zone there twice, at least once or twice before it goes again. And that's always a really good place. Now, that happens over and over and over again at the first touch of those moving averages. Now, the market went sideways, and it went into a rectangular pattern, and I noticed the share. I like to buy shares at support. And if you draw a line underneath those 3 lows in there, just there, you got it, sir. Then just there. I bought into it on 1 up candle after the low just there at the 55 moving average. And it went up quite nicely, and just about there, went up on reasonable volume. And the risk is next to nothing. Now, I was greatly influenced by the work of a technician by the name of Richard Wyckoff, who he also, Glenn, was before your time. He wrote all his work in the 1920s and the 1930s. And Wyckoff used to say that he buys at the extremes, and this is his word in his little book that I carried in my case for about 50 years until it fell apart. He says, I like to buy shares at the extreme, where the risk is least and the potential reward is the greatest. So I do my best to try and buy. If I see the shares up, rising in the 21s above the 55, if I see earnings per share is really, really strong, then I do my best to get in at the lows. And again, that's a lot easier to talk about than to do. And that's another setup that I teach in the Precision Swing Trading course. Mr. Wyckoff called it a spring. And those of you from the UK that are listening will know that I rabbit on about springs on every occasion because they've made me so much cash over the years. At the moment, the share is trading in what I call a multiple inside pattern, and it needs to break out. So if you're not in, folks, there is, you see, there's 3 days, the last 3 days, including today, are trading inside the candle 4 days ago, and that's called a multiple inside pattern. If I were getting into that, I would buy a break of the high of the doji. See the doji? No, that one. The one, no, 3 days before that one, Glenn. That one. That's what I call the mother bar, because it's in fact outside the range of the 3 days that came behind it. So I would in fact buy a high of that mother bar up there if I wasn't in already. My stop loss, I've taken off half. My stop loss is at entry, and with any luck, that's going to keep going. And it's on a buy recommendation on VectorVest. Everything is saying yes. I don't know what's going to happen next. I would give it a 70% probability of moving. I haven't looked at the S&P since we started this. The S&P was sitting slightly above 350 a moment ago. If that hangs in there and the general market keeps moving, then we should be okay here. So that I think has got lots and lots of legs. Now, if you see a market run sideways like that, technicians will in fact look at the flagpole to project the target, and the target is a long way up the park. You know, another $100 up the park, and this is a great little company. Okay, so what's really interesting is that over the last 3 days, the price has gone sideways on virtually no volume. That's a very good sign. It means there's no sellers. Just in there. See how the market's pulled back on virtually no volume? And interesting, I looked at this intraday, and although there's volume on 3 days ago, there's a big volume bar. Most of that volume was actually done as the market rose there, not as the market fall. You could only actually see that if you actually go into the half early bars. So, I like it. But if you're not in, I would wait for a breakout of that mother bar. Okay.
I'm right on board with that. I'd like to see the stock break, but even at this particular point in time, it's not pulling down drastically. It's not moving up drastically. It's sort of muddling around. I'd like a breakout, but earnings per share looks good. Earnings per share looks good. And that could be a precursor to the stock's price to pull back up and start rocking and rolling. And we're not that much removed from the most recent 6-month high. So that's another good thing. It's still trading very close within the level of the most recent high. That's a good thing as well. What's the word I'm looking for? From a candlestick pattern or from a pattern, I don't see the flagpole, I don't see the pennant, I don't see none of that. But that's just me. Just like I can't see a cup and handle, nor can I see the head and shoulders. I have a hard time visually seeing those things on the graph. But I do like the sideways move without slamming down or rocketing up. This is a nice little pickup. Volume looks good. I mean, earnings looks good. I just wait for some confirmation. JD?
Yeah, same. Pull back to support. With the recent high there, stock breaking out. Anytime you get a breakout like that or a new high, look back historically. Is that new high? Does that new high resulting in a breakout of some other pattern? So we're looking at resistance back in June, July, August. So the recent breakout is a breakout above resistance. A lot of times when you get kind of pulled down a little bit further, I'm looking more in the zone. Keep going, right in that area there. Yeah, so you're looking at not at exact price point, but more of a zone. You got 1, 2, 3, 4 touches in that zone. Breakout recently. A lot of times what happens when you get a resistance breakout to the upside, you get a retest.
It retests support.
Yeah, it becomes support. We're getting a retest of that support. I like David's analysis where, we got 3 inside days, each day falling in between the range of of that first day there. So we got 3 inside days. Using the high of that unfilled red candle there would be perfect.
All right. Good pick, David. All right, let's go back. Let me undo the zoom here. Your last pick is Pinterest. As you said, Pinterest. Here, we call it Pinterest, so a little different. But Pinterest is the right way to say it.
We'll call it pins. We call it pins. Guys, there's the 21. First of all, it's a technical play. As you can see, the share was losing a heap of money until a few weeks ago. And the earnings per share went from negative to positive. So this is me living on the wild side. Clearly, somebody got a sniff of that in advance because, as you can see, the market gap before the earnings were reviewed. So somebody got a sniff of it, and I'm glad to see that the American market is as leaky as our market. So it gapped up, and the 21 and the 55, it pulled back into the zone a little bit, and volume, as you can see, it rose in huge volume. It's now pulling back on low volume. I'm maybe a little disappointed that the volume hasn't gone up a little bit today. I'm really happy as long as it's above 35. Now, if you could just blow it up maybe to 3 months, Glenn, that would be awesome, sir. There's the chart now. It went sideways. Now, this is one of my spring setups, but if you can draw a line under the lows, up to that low, yeah. You see how the market goes sideways, and then it gives a nice hammer type candle, and then it goes up, and it simply runs out of money up there, and it comes back and runs the stops underneath that hammer that I spoke about a second ago. And it doesn't have to go far below that low to, in fact, do that. In fact, if it makes a double bottom there, it will run the stops because of the spread. So, and then it turns there. Now, that's what Mr. Wyckoff referred to as a spring. And it's been my bread and butter in markets for a very long time. I've struggled to teach it because people are looking for something much, much more complicated than it really is. So what we're looking for is a trend. And we're now looking for good fundamentals. These fundamentals are not great, but the growth fundamentals are turning, and it has run the stop losses. And that's really good because that's the smartest money getting in at a good level. Remember that if you're trading this thing with many, many millions of dollars, you can't press the little button like we can. You've in fact got to generate that liquidity from somewhere. So invariably the market will go down, run a whole football stadium full of stop losses so that the smartish money can get in at the best price. It's now starting to move up the page. It's my hope that the smartest money has been filled, that accumulation zone is over, and now we can have what Mr. Wyckoff would have called markup. and it's doing its best to get up there. I'd be happy if there's a little bit more volume going into it, but it rose in really good volume. And if you can look back, Glenn, at the last little few swings, that swing that happened in the middle of June, although it doesn't look much now, in those upswings, you can see that volume was ticking up there down below. See there? And then in the next upswing, the same thing was happening. So if we were looking, there was plenty of evidence to suggest that this was moving. Now, look at the 2 days before the gap. You can see that in those 2 days before the gap, the price was tight, but look at the volume. And the insiders can do one hell of a lot of funny things with price, but they struggle to manipulate volume. So if you understand volume, and there's nothing much more to it, that if price rises and rising volume, all is good, and if price pulls back on falling volume, also everything is good. So I would like to see this market break through that high on big volume. If you see that market breaking through that last high of a few days ago, that one, on a nice big bar up, then I think that thing can fly. So as long as it stays above 35, I think it's a buy. But it's not for the faint-hearted, because the VectorVest fundamentals are not great, which means there's an awful lot of people betting on the potential of this company, and that potential, in fact, if it happens, great. If it doesn't happen, the share will get a sure and a swift haircut. So, not for the faint-hearted, but I'm in. As my old rugby coach used to say, the ball is in, the game is on.
I like a couple of things. I like the bounce off that level, created a level of support. I like the bounce off, and I like that it's skimming right off of that moving average. It didn't pierce through that moving average, even here. That moving average is serving as a beautiful level of support, backed up by this level of support. So it's got two support assistants all at the same time. And I like, I'm with you. I'm kind of surprised with past experiences that the volume is not rising up with that bounce. That's kind of interesting. It really is.
Yeah, I'm disappointed at that.
But you know, a graph is what has shown you in the past, and each one of these times volume has risen, with the exception of this one. So we'll see what happens. I like this level of support as a good way to get out of the stock in case it gets that haircut. That might be a really good opportunity to pull whatever you got in off the table. But if it does rise, it's got the potential, the propensity. Put the boards, put them together, the propensity. Anyway, it's got the good chance to break through that high. So that's what I think. JD?
Yeah, the only thing I'll say is the industry group that the stock is in. The stock itself, the company just recently turned a profit. They're in the e-commerce industry group. E-commerce is an emerging industry group, you know, since March, right? Since February, March, since everybody's been required to stay home. Everybody's shopping from home. Looks like Pinterest is benefiting from that. Looking at the earnings announcement, looks like they blew their estimates out of the water. I like the pullback towards the 21-day moving average. So just in terms of the industry group, it's in a really good industry group, an emerging industry group. I would be concerned a little bit about volume as well, but that's kind of the only kind of red flag that I see here.
Good catch with the e-commerce, because since COVID-19, that is a happening industry. That really, because everybody and their mama, that's right, I said they mama. Everybody and their mama is shopping online. So, e-com, you know, or people is, you know, Pinterest is in that social media space. Everybody's putting more pictures up online. Why? Because they're at home. They're not, you know, at work and all that kind of stuff. Hey, I'm going to take a picture of this meal. Hey, I'm going to take a look, and they're taking a picture of everything, and so that's true. All right, thank you, Dr. David Paul. Thank you for your picks. Jerry's going to have the mouse for this, so I'm going to sit still and look good. I'm really good at that. And JD is going to control the mouse until I take it back over after he's done. So all JD, right, don't forget to tell everybody who you are and what you do.
True. My name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Been with the company now 14 years. I'm heavily involved in anything that we do in terms of swing trading, creating courses, delivering courses, teaching webinars, things like that. So my picks for today, I know we're running a little bit over today, so I'm going to be quick here with my picks. DR Horton and another gold stock, KGC. So I'm just going to highlight them both. We'll start with DR Horton. Just in terms of the analysis, it's undervalued. Current price $71.58. We value it at $93.41. It's got good RV. Glenn talked earlier about what RV is. The upside potential. So you got good upside potential over the next 1 to 3 years. Really safe stock, 1.47 relative safety. It's in an uptrend, 1.55 RT. Good VST, which combines the three of those indicators. CI comfort index, a little bit above 1. It's favorable, which is good. They're earning $5.80 a share. We forecast them to grow that at 12% over the next 1 to 3 years. So nothing really wrong with the stock in terms of its analysis. Undervalued, good upside, safe, rising in price, solid earnings performance as well. Kinross Gold, a little different. It is undervalued. Current price $902. We think it's valued at $16, which is somewhat unusual for gold stocks. For the most part, gold stocks are overvalued. For the most part, I mean, the industry itself, the sector itself is generally considered overvalued because, like David said earlier, the gold is in the ground, the value is in the ground, and sometimes not yet mined, right, with a lot of these companies. But KGC a little different. We think that we consider them undervalued, good upside potential, relative safety just a little bit below 1, not too far below 1, so at 0.99, that's fine. In a nice uptrend at 1.54, good VST. Really good comfort index at 1.55. They're earning 67 cents a share, which we feel they'll grow that at 36% over the next 1 to 3 years. Gold is hot. The building sector is hot. So, I always try to select stocks in strong industry groups, and both of these stocks are. If I scroll over to the right here, we can see, we can see that DR Horton, it's a building stock. They're builders, and Kinross is a mining company. Okay, so good industry groups there. If I click on graphs, I will move here. I'll start with KGC. So nice uptrend overall. We're looking at the last year. A nice pattern here of higher highs and higher lows, particularly over the last 6 months. This is a setup, guys, that I put together about a year or so ago. So what we're looking at is a 50-day moving average. That's the purple line. 150-day moving average. That's the yellow line. So an intermediate term moving average and a longer term moving average. What we look for is price to be above the intermediate term moving average. Also, obviously, would be above the long-term moving average. So intermediate term uptrend, long-term uptrend. I like trading pullbacks. So what we look for here is a pullback towards that 50-day moving average, which we see, right? We see a nice kiss of that 50-day moving average, just recently retraced off of it. Kind of the added piece here. So with the 50 and the 150, we're looking at an intermediate term moving average and a longer term moving average. I like to add another indicator to give me an idea of the short term trend, right? And I added stochastics to it. Well, first off, you could see that earnings per share at the bottom. Really, really nice, right? So we're adding another layer there of fundamental valuation to a more technical setup. And it really is a technical setup because the price retracing towards the 50. Stochastics is the indicator, which I love. I use it a lot. I added that for the short-term trend. And I just give myself a date line here. The kiss of the 50-day moving average really is your setup. The trigger for me with this type of a setup is the stochastics oscillator crossing from below 20 to above 20. You can see that happen. Let me zoom in here. You can see that happened Friday, and we're seeing nice follow through again today. So intermediate term moving average, price above that 50, also above the 150. I talked about the separation that I like to see between the two moving averages as well. That's just indicating, a strong trend, even with a pullback and a kiss of that 50. You got a nice retracement, stochastics crossing from below 20 to above 20. There's my trigger there. It's not the kiss of the 50. It's the kiss of the 50 is my setup, and the stochastics going from below 20 to above 20 is my trigger there. So looks like we got nice follow through again today. My stop loss, my initial stop loss is going to be the recent swing low here that I am entering off of. Also, if I draw a horizontal line here, you can kind of see that whoops, let me take off. Oh, that's the last close. You can see that the recent swing low is higher than a few of the recent highs here that we've seen, right around $7.73. And the recent swing low that we are pulling off of is right around $8.40. So a nice trend there, a nice strong trend. So that's why I picked that one. David?
Well, Jerry, I love the pick because gold is strong, and of course, my pet hobby horse, the Wyckoff Spring, is present there as well. The market pulled back, 3 weeks ago. It then went up, couldn't make a new high, and then came back and ran the stop losses of the previous low, and now it's moving up the page. So that's just a perfect low-risk trade where you're getting in at the extremities where the risk is least and the potential of reward is highest. So, yeah, that's just a cracking trade. It really is. So awesome.
Great.
I think I'll buy a few of those myself.
Right.
I like the two levels again of support. Between that level of support that you drew and the moving average, I think that that helps to increase the confidence in the trade. Now you look at today, and this is what happens a lot when we talk to people. Well, the trade's not doing anything today. Get out of your own way. Let the trade come to you. Everything, the setup is there, the trigger is there. Be patient. And from a swing trade perspective, you don't have to make a decision today and say, I'm going to get in and get out today. That's the beauty behind the swing trade. All of these trades that everyone is doing here is showing some semblance of a trend. If you're going to swing trade, you need some semblance of a trend, whether it's moving averages, whatever it is. That trend is going to keep you sane and keep you from jumping all over the place. But I do like the combination of both of those levels of support, and as David said, as a springboard, or however you want to call it, it's moving up, and there's a method to the madness, and that's what makes it all about. What makes it well worth it.
They stole, Glenn. It takes them a while to get out, because and somebody once told me a long time ago that 80% of the points are made in the last 20% of the time of the trade. So what happens is that the darn thing does nothing and nothing and nothing and nothing, and then in the last 20% of the time it takes to get from A to Z, it makes 80% of the points. If you've ever done any day trading, which I know you do in the room in the morning, you'll find frequently that the market starts to move about a nanosecond after you've decided it's never going to move and you leave. Then it flies. So a nanosecond is a very small amount of time. It's the amount of time it takes in London for the traffic light to change to green and the bloke behind you blaring his horn. It doesn't take very long. That's always helped me stay in trades. 80% of the points are made in the last 20% of the time of the trade, and it takes a great deal of strength to actually just hang in there.
Scott is asking about the target for KGC. It would be the recent high here, right around $10 and change, and the support level here at about 825, maybe 830 would be your initial stop loss. I like what David said. Take half the profit off move your stop up to entry, and let the rest run. So most recent high here would be your initial profit target. Look, if it breaks, if it blasts through it, great. But if you see any hesitation in here, you can see the doji here on August 5th. Any hesitation at that recent high, you take half the profit off the table, move the rest to entry, and let the rest run. All right, so DHI. DHI would be what Glenn considered earlier more of a setup trade. I'm not really ready to pull the trigger, although earlier in the day, it actually looked pretty good. What I'm looking at here is a 20-day moving average. It's a simple moving average and a 14-period ADX. This is a trade actually called, this is a setup called the Holy Grail, developed by Linda Ratchke, something we teach in our Trade Like a Pro course. So what I liked about it was the pullback, recent pullback towards the 20-day moving average. Earlier in the day, it was actually up a little bit, so that's one of the reasons why I chose it. Still looking at a relative indecision today, but the 14-period ADX comes into play when the stock is trending, okay, and right at the pullback, or as soon as the pullback begins towards that 20-day moving average, what we look for is the 14-period ADX to be at least above 30. That indicates a very strong trend. That gives you an indication that the pullback will likely be just that, a pullback, because again, the trend is so strong. Price kissing the 20-day moving average is the setup here. Okay, so while I'm not ready to pull the trigger yet, let's kind of wait for the day to finish. What I like though is the kiss, the hesitation right at that 20-day. Let's say that price closes relatively where it's at now, 71.62. Price goes above 72.63, which is the high of today. If that happens tomorrow, that would be my trigger. Okay, so confirmation, about 12.5 cents is generally what I like to use. Above the high of the kiss candle, there's your entry. All right, and the stop loss is going to be really tight. Is going to be the low of the reversal. Yeah. So the low of today was $70.84. If I enter, 12.5 cents above the high of today, which was 72, let's say it's 73. My initial stop loss is $70 and let's say 70 cents, just about 12.5 cents, 13 cents below the low of today, really tight. And my initial profit target is the high, 77.45. That's where I'll look to take half my profit off. And let the rest run. So a really simple setup here, just price trending higher, strong trend with the ADX above 30, pull back towards the 20-day moving average, kiss of the 20-day moving average. Tomorrow I'm going to need to see price go above the high of today, 72.63, before I enter the swing low, right? So let's say price moves a little bit right in this area here tomorrow, right above the high. Well, now we have a swing low form today. That's going to be my initial stop with the most recent high as my profit target.
I like the quick get out because if the trade is pulling back for the last few days, and do me a favor, Jerry, put CI on there. I bet you CI is relatively high. That's what I'm going to think because I don't think this stock pulls back a ton. It's above one. I'll take that.
Just crossed above one, actually.
I like the quick get out because as a setup, you don't want to be in no man's land. You get in and go, okay, what do I do now? I like the current day's low as a way to get out because if it's not doing what you wanted to do quick enough, get out, look for another trade. That helps to mitigate losses real early. If the stock does tend to bounce off of that 20, you got good upside to that level of the high, which would be a good swing trade. Remember, all of these trades are a couple of days to a couple of weeks. Some of them could even be longer. Don't limit yourself if the trade is running. But the general gist of a swing trade is a couple of days to a couple of weeks. But I do like the early get out just in case so that you're not stuck there going, well, what do I do? And having a plan is so important. David?
Yeah, well, I if you could just blow it up, if you would mind, Jerry, a little bit to the last 3 months or so, or three. It's very simple-mindedly. The share was pulled back to the last old top, which was that red candle just there. That's where anybody who's bullish on Horton will be buying it. Every Wall Street dealer will be looking at it at that point. So that is quite important for me there. And the other thing that would be useful to put on would be a volume chart to see how the pullback happened, what sort of volume it pulled back on.
There were some buyers. There were some sellers. There were some. No, maybe not.
Price rose on rising volume, and price has been rising and rising volume on this, and it's pulled back. Maybe not as dry up a volume as I would like. Certainly, there's no volume going into it today. I like it around these levels. A nice big green day tomorrow that engulfs today's. Also today, the price action today is really, really, really tight. That's a good sign as well. So
right at a moving average, especially.
Yeah. Give it another day. Give it another day,
absolutely.
and I think there's a trade there. Yeah.
All right. So, one, thank you all for being here with me with these stocks for this panel. I think that a lot of people out there found some stocks that potentially are things for them to look at. If you've got some swing trading money, remember, this is not for your full-blown retirement account. This is for trading. Maybe not day trading, but the swing trade, we've already defined what it is. You've got some great candidates to look at, and that's the reason why you come to these hot stock panels. So again, JD, Jerry, thank you for being here. Dr. David Paul, I thank you for all of the, I wanted to put testicular fortitude in there somehow, but it just didn't work. So I know you did.
Just didn't fit, huh?
It just didn't fit. I left it alone. But every time I hear you speak, I wait for you to say that at least once. That makes my whole day of you being here. So thank you guys for both being here and for your insight.
Pleasure.
All right. And
Great pleasure, Glenn.
I think Joey's going to turn them off or not. Are you going to keep them here?
Yeah, definitely stick around.
All right, so stick around. Don't go nowhere. Don't turn off your camera. Hey, but don't do anything you don't want nobody to see you on camera either. So I just tell them putting that out there. What, do we get ready to say, Jerry?
Good. I got a webinar in a little bit, so I might take off.
All right, then so be it. Again, adios, my friend. It's good seeing you.
You too, my friend.
All right.
Cheers, Jerry.
Take care, David.
All right, real quick,
man.
last couple of things I need to wrap up with. Who won the cup? Who won the mug? I can see the chat on my phone now. Huh? Harry?
Albert.
Harry Albert. Harry Albert won the mug. Congratulations to you, Harry. Thank you for being here, supporting the channel, and we're giving you out a mug today. So I see Leonardo says, great information, well-experienced professionals. Thank you for that. Jay says, thank you, David, Jerry, Glenn, and Joey. Thank you for that as well. Ron says, thank you, panel members. So I'm glad that you guys enjoyed it. David, they all enjoyed you as well. I will add, we are going to be talking about a webcast coming up called the Options Jumpstarter course for any of you who are interested in learning options. We have a course called www.vectorvest.com/options. It'll take you to this website. Joey will put it in the chat for you as well. The Options Jumpstarter is all about getting a basic understanding of options. If you don't have options as a part of your tool belt, you need to. All right, it is a definite way to help you to play the markets both to the upside, to the downsides, but more importantly, to play options for protection. There's a lot of opportunities when the market goes down or your stock goes down, and you really don't want to get out of it. Having options is a great way to protect your stock plays without having to get rid of them. It's a play called a covered call. So the beginner's guide to profitable options trading is going to look at basic options, calls, puts, covered calls. Go to that link, sign up for it. It's a webcast. It is a webcast. It is free. before everybody starts running. It's free. It's free. Just learn. Have an open mind and learn what you can add to your tool belt of investing. Everybody's here to want to make more money in the market. Don't run from an opportunity to do just that, just because you're scared. All right, so I'm just putting that out there. As I mentioned as well, Joey is going to put a link again in there. If you want to take advantage of this software that we showed today, the VectorVest software, there's a link for 99 cents for 30 days. Folks, you're going to get everything that we showed here. There's nothing add-on. Everything, those graphs that we showed, that graphing package is bar none one of the best you will find in this industry. It is so flexible to accommodate exactly what you're looking for and to give you the answers that you need. Always is not going to give you the answer that you want, and that's good. Take the answer that you need and let the graphic package give you the answers that you need. We track over 19,000 stocks globally. We time the market. When we talk about timing the market, it's not about trying to find out which way the market is going to go. We keep you on the right side of the market. And as David talked about, a timing signal called the DEW timing signal, ideally useful for swing trading. And all of that is included in that 99 cents for 30 days. The link to the podcasters is www.vectorvest.com/YT for YouTube. So for those of you who are on listening by way of the podcast, www.vectorvest.com/YT. You get the software, the desktop software, desktop version of the software for 99 cents for 30 days. And don't forget, next Thursday or this coming Thursday, we will be here again on YouTube for Trending Thursday. If you subscribe to the channel and hit the bell icon, you will be alerted to all of the upcoming content. David puts content out every Friday for the UK market, but he's got a lot of insight into what's going on in the market. Our YouTube channel is growing, and it will only continue to grow as far as you support it. So if you like this content, please subscribe to the channel. All right, with that, once again, I'm going to say goodbye to David. David, once again, thank you so much for being here. I love the insight that you give and the information that you open up to people who are not aware of it. You do them a great service, and it is my honor to have you here on this YouTube live as well.
Been a pleasure, sir. Thank you.
All right, and with that, folks, we're out of here. Adios, arrivederci, ciao, au revoir, sayonara, salam, shalom, namaste, adios. We're out.